We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at money supply and its effect on crisis. What we have in front of us is a chart showing the true money supply on the Austrian theory. True money supply is standard money to the public, i.e. ready available. And the M2 money stock, which is all money available. We have the dashed line here, which is the stock market, and the black line here is the real GDP. Now, whenever the most liquid true money supply sinks, it pretty much forecasting some sort of crisis coming forward in the next 24 months. Now here we had the 1991 recession. Here we had, I think, the Mexican peso crisis. Here we had the 2002 recession. This is also when the Nasdaq sell-off destroyed capital. So the Fed took money out of the supply and obviously destroyed that trend. We obviously got into the wider market. Here we have the old 2009 global financial crisis, money coming out of the market. And now, once again, just before where we are now, we've had the COVID sparked crisis / Fed defending corporate credit. So it's a work in progress. Now, understanding the Fed's action in the sell-off in 2002, the Fed wasn't there. Okay, the Fed didn't really get involved that much. In the crisis in 2008, the Fed got involved at the end. If they got involved earlier, right, maybe this dash down wouldn't have happened. Okay, Lehman would have been saved. So at the moment, the Fed up here, the Fed has already got involved. Okay, it's like imagine if the Fed got involved here. The Fed's got involved on the smash down on the COVID crisis. So the point about it is that we're seeing money supply accelerate. Okay, money supply accelerate while the crisis is ongoing. Money supply accelerating while the crisis is ongoing. What you also must notice is that even though money is accelerating on the crisis ongoing, is that, hang on, painting tool out of the way, here we are, is that it doesn't always stop the crisis. Okay? Ooh, not so bad here. Now, subject to, has the Fed stopped the crisis? Because the Fed didn't get involved until down here. They weren't really involved in here, but they got involved early up here. Okay? So the big question I have for the listener is if you can see the expansion of the money supply here, 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 well, what do you think this is? That's double of this here. So at the moment, true money supply is expanding. We'll have to wait and see if it gets up to anywhere near over the previous highs. Okay. Now, what I want to point out is that see how the true money supply is expanded here. Okay. Well, stocks went up that way. Stocks went up that way, and stocks went up that way. Obviously after the initial shock. Okay, so question is, okay, the Fed has got involved early, right? The Fed has got involved early. Now, if the Fed can hold the market to these levels, what happens here? Because all that money might find a home in stocks. Now we've seen what happens when the government issues money to people when the gambling shut down. They go straight into the stock market. The Robin Hood traders have gone nuts. The question now is, when will the confidence for people to take their take some monies and put them into the stock market? When they know the Fed has got the support. They've already seen an example. The Fed, the COVID sold off, and the Fed and the Treasury Department obviously did some buying. I think about 4 or 5 trillion. The dollar crept up to 103, 104, and the Federal Reserve, in their own words, said the market became unmanageable in the Treasury market, so they had to get the dollar down. So they had to provide liquidity, so they started buying. All right. Now over here, the Fed took bad assets off the balance sheet. If they started buying Lehman stock up here and supporting Lehman, then maybe this wouldn't have happened. So you get the feeling that what's going on over here, that they've started talking about buying corporate credit because that was the major risk. They pumped in lots of money. They're going to cap interest rates, or they're thinking about capping interest rates. So when the market works out, probably in the second time we have a go at support, that the Fed is truly there, maybe we should assume that this money will creep back in the market and we'll get another consequence of the money supply coming in the market and pushing stocks up higher. Of course, we must understand that if the dollar breaks over 103, 104, as the Fed experienced, the Treasury market became unmanageable and there was like some no bids, then all things could be off. But I've posted a chart on Twitter that's worth looking at, and that is there room for the market to move? I'll click it over. And here we have this chart here, which shows the black line, which is growth, and the red line, which is value. The growth is like, you know, your tech stocks which don't pay any dividends, and you know, what have you. You can see they're exploding, and as you can see here, the grey line got up to 1.6. So this could explode in one of these type of completely money saturated blow off tops. Does that work? Come here. There you go. We could get a little top like that. So that would be quite incredible. That would probably take the S&P to 4,000. But that's where the money could come from, as I expressed over here. If this money is created here, and it's proven that the Fed has the bottom, the dollar doesn't breach 104, 103, all that money is going to find a home in risk-on assets. It may take the conclusion of the US election to give the confidence for the market to move. It may take a little bit of a test of the lows, but one has to ask, will history repeat? Because then it would be one of the most interesting starts in 2021. And of course, any blow off top, even like Bitcoin, could do that sort of thing straight after. So it's not going to be a buy and hold situation. It's going to be a situation to watch very closely. Anyway, thanks for watching. Money supply is exploding. If the Fed has the bottom and they buy any dip, maybe after a test, maybe after the confidence of the US election once it's over, watch out. See what happens to that money supply and where it goes. Thanks for watching.